All right, guys. So welcome to another video. So in this video, I'm going to be talking about the Marketing Controller 1.0. All right. So basically, what the Marketing Controller 1.0 is, it's pretty much just like everything that you guys have learned in this whole entire course put into one video. All right. So this section of the course, and also this is the hard mode, right? So this is the hard mode and the market mode. Those two modes are gonna pretty much have they're pretty much gonna be updated like I think weekly or bi-weekly, right? Because every week I'm gonna be doing webinars and I'm gonna be posting them up in a course, as well as what else am I gonna do? As well as these marketing controllers 1.0s, 2.0s, 3.0s, 4.0s, and the list goes on and on and on, right? I'm just gonna keep posting these parts of the course is gonna be updated weekly. So every week or every 2 weeks, you guys are gonna see a new part of the course, or I think once a month. It depends. But you guys gonna see. You guys gonna get more content in this section either way, right? But everything else from before this is just gonna be what it is. I might tweak a few things maybe in the future. I might tweak like if I change something about my method, I might tweak it. Might ask me in there. But if not, then I might leave it there. And then this is the only part that I'm gonna be updating, all right? So if you guys want to stay up to date with what I'm doing on a day-to-day basis, this is the part where you guys pretty much going to see that. So stay tuned for that. But yeah, let's get into it. So the first thing I usually do, you guys know by now, is I go on my weekly time frame. All right. So let's just start. Yeah, start right there. All right. So if you just focus on like this area specifically right here, what you're going to notice is pretty much price is on a downtrend, right? So for the past, I think about 1, 2, 3, 84 days. So the past 84 days, I think 1, 2, 3, 4, 5, I think 12 weeks, right? Seems right. 12 weeks. Sorry, no. 84 days. Yeah, 12 weeks. For the past 12 weeks, price has been selling, right? So number one, look for your trend. So once you look for your trend, you realize that it's a sell trend. So now my mindset is shifted to the sell side. I have a sell bias, right? So I'm looking for sell opportunities. So pretty much anything that happens up here and anything that happens down here, I'm still looking for sell opportunities, right? So when I look at price action, I look at the charts. Like you know what I know has been the most. I know when people just say they see one bullish candle and they're like, yeah, USD JPY is gonna buy, or they see like one bearish candle, like, oh yeah, USD JPY is gonna sell now. Like, yeah, some of you guys may know how annoying that is sometimes, but it's just that people think a trend is gonna change just because of one candle, especially like, even if it's a daily candle, they think the whole trend's gonna change. It's just like a little pullback or something. If you look at, like, you have to look at it from a further standpoint, like a further view, right? So, for example, right here, we have this supply zone right here. So with that supply zone, with that being said, price from here until like, let's say down here has been selling. So the one thing that I don't do anymore, just because I'll explain to you guys in a bit, but just because yeah, the one thing I don't do anymore is you guys will never see me look for an entry up from up here. Never. Like, you'll never see me have an entry like this. So you guys probably like, yeah, why not? This guy's like, yeah, why not? It's a wick entry. That's a good entry. It's a good entry for a sell. No drawdown, right? But think about it. How do you know that price is just not gonna? Because look, if you look at it from here, like, let's say before any of this happened, if you look at it from here, you'll see that for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, it's been buying. It's been buying for 11 weeks. So why would I sell it? Just because it's at the top of resistance? Like, who knows? Like, cool. What if I answer a sell? I answer for a nice sell from here, right? Whatever, 900 pips, right? Whatever. But like, why would you want to put yourself in a position where you're gonna be risking your account, right? So usually, well, since we're on a buy trend, I'll usually look for something like this. I look for something like this to form. A new candle to close above, and then a retest and continuation of uptrend. So pretty much I'll wait for a new candle to close right here. wait for the retest, and they'll enter right here for a long, right? In this case, obviously that did not happen just because price started to reverse, right? So you have to trade what you see and not what you think. If I were to sell it here, that would have been a trade where I would put it under the column. I would trade I'll put that trade under the column. I trade what I think, right? Not what I see, because what I see is a buy trend, and if I enter a sell here, I would have traded what I thought. I would have thought that it would have rejected the resistance. You see the difference between following the market with an uptrend and just trying to think that's going to reverse off of resistance? Yeah, see what I mean? So that's why I don't have those type of entries anymore. I usually catch the middle move. So pretty much from here to here, you do not need to enter here to make money, right? And from here, let's say you buy it from here to, let's say you buy it right from here to back up here, you don't need this area to make money, to enter and make money off of. But what I mean by that is, let me go more in depth first. But let me first draw my demand zone down here. Let's see, we got that zone right there. All right, cool. All right, so if we're just focused on this area right here, we see that on a weekly time frame, we have a supply zone and demand zone, right? Price is going to reject off of the top and the bottom, come back to the top, come back to the bottom. And whatever happens in between here is what I catch. So pretty much, I don't care about this part. You don't need this part to make money. You don't need to answer off here to make money for a buy. You can use the answer for a nice sell trend, right? So the moment that I realize that price is reversing, is not going to be off of this one candle. It's not going to be off the second candle. It's not going to be off the third candle. It's not going to be off of the fourth candle. The moment I realize I was going to start selling is when, go on my daily, when price action forms, when price structure forms, when more structure forms, all right? So what I would have done here is pretty much, so let's say over here. So this is the top. This is the top of the mountain. All right. So now we have a little rejection coming down, some consolidation here, and continuation of a downtrend. So what I would have done here was, since I've seen that there's a rejection and a pullback, I would have been looking for sells. Like from here and down, I would have been looking for sells. So one way to sell this is, first, some people would have done this. They can just easily draw a trend line like this, and boom. Any of these candles that you entered off of that touched the trend line would be in deep profits. You would enter here and have no drawdown. Or what I would have done is I would have just drawn my demand zones right here, like this, right? Because I know that once price breaks this and retests this, we should go down to this zone. All right. We should go down to this zone. So this is about 96 pips, 100 pips, right? So this is not too bad of a move, right? From here to here, not too bad of a move. So let's see, if we go down on a smaller time frame, let's see what we have. Smaller time frame. All right, we'll have a retest there. Let's go down here. All right, no, this is a bad example, but you guys will get what I mean. Let me show you guys again. So pretty much what I would have waited for in this case, in this sense, pretty much simply one thing. I would have waited for a candle to close below here, and then I'll wait for a retest. And after that retest happens, I'll sell it from here. I would have shorted it from around here, right? I would have shorted it to around there, and my TP would have been right here. All right, this is a bad example because price didn't actually retest the zone, but I'll show you guys more examples. But pretty much that's where I would have entered, right? From there to there, and then maybe from, okay, let's say here, let's go here. Let's go to, all right, here. All right. So since let's say I missed my entry there, whatever, it's cool. Now people are thinking, wow, I missed my entry. Now I'm gonna chase the trade. I wanted to, because I know it's gonna sell, but I missed my move. So fuck, I'm gonna force myself into the market. And then people start to like force themselves into the market, and then that's when they start losing money because they're not looking for the right entries and they're just rushing their positions just because they want to be in the market and they want to sell it so bad, right? Right. But what I would have waited for, because since I missed the move here, I would have been cool, whatever, rub it off, whatever, right? I would have answered off right here. This would be another entry. So pretty much I would have had a zone right here. Right? I see multiple rejections here. And I know, so we see that, one, we see that price is selling, right? So number two, so you draw your demand zones, you apply the demand zones. So right there, that'll be your zone. Number two, wait for price to retest this area right here. Boom, enter for a sell. Let's go short right there. Stop loss probably like above here. So right there, 20 pips. And then TP, I would have been strict with my TP. I would have been TP right there. You should do it right there. Nothing too far. Right there. A nice 80 pip move, right? So basically that's the move that I would have caught. If I missed the move up here, I would have caught down here. See what I mean though? Like if you didn't if let's say you use a trend line, let's say you didn't get an entry up here. If you didn't get an entry up here, it's whatever. You can get an entry right here. If you didn't get an entry there, you can get an entry right here, right? And same thing goes on and on and on. Like you can just cash all these entries down till like this level down here. But the first thing you gotta do is like you really gotta focus on like what's the real trend here, right? That's what you gotta put your head on. Like you gotta realize that it's a sell trend. So from here to here, I just be looking for sells. Like don't be looking for buys. Just one pullback. You know what I mean? So that's what I mean when I don't care for a wick entry move, and I don't care for them anymore. I don't cash them, not because I don't want, not because like I can't cash them. Like I could catch a wick entry move, like anyone could. You just draw like right here. I could have just drawn this line and then enter right there and enter a sell down here. But like, how do you know that price is? Like you see this whole area right here. Like you see the whole area. Let's say you did sell here. Let's say you went short right here. And your stop loss is like right below above there, and your TP is like right here, right? Because you've seen that this is the next support, right? Let's say you enter here. Wow, 900 pips, right? Oh. Yeah, 900 pips, right? But then you got to worry about this whole area right here. Like look at all this like wicks and lines and candles and everything, right? All those candles right there, it's pretty much just showing you that like the price has to have a lot of momentum and pushes and a nice strong catalyst. In this case, is $1. So something really bad has to happen to $1 within these couple of weeks for it to drop down this much, right? That's what people get confused at. They don't think about, okay, cool. Let's say USD JPY is gonna drop 1,000 pips. Well, what's gonna move it 1,000 pips? Like what happened on this day? If you were in Google and search up what happened on this day of 2018. January 1st, 2018, all the way down. What happened that day? You know, you probably see something in the news that happened that day, or something on Bloomberg or something, right? So that's what I mean. Like, I won't care for an entry up here, and I wouldn't care for an entry for a buy up here, right? Let me show you guys an example of what kind of entry I would have had on the buy here instead of this wick entry down here. So it will be easy. Like I said, it will be easy to enter along here, right? It'll be easy. It'll be less stress, I guess, but look at it. And you enter your TP here. Cool, 900 pips again. You could enter a sell and a buy here, easy, right? But what if price broke the zone and continue to sell off? It's a downtrend, right? You gotta think about it. Why would you go against a pair when you gotta worry about it like coming back at you? Like let's say you're selling, why are you gonna sell UCGPY when you gotta worry about it? Like, I mean, why are you gonna buy UCGPY when you gotta worry about it selling every time, right? Because it's been selling for like 12 weeks. So you know what I mean? So an entry for me on in this case would have been it would have been, let's see what it has. What the other? An entry for me on this would have been right here. So instead of entering down here from here to here and getting a wick entry, I would have entered right here. So basically what happened here was I drew my supply zone. So right there. This is my supply zone. Wait for a candle to come to open up, retest, and after I would have bought it around here. If you're going to a smaller time frame, this entry probably would have retested somewhere. You guys probably see it on like the 1 hour or something, but pretty much I would have entered right there, and I would have longed it until probably right here at this zone, right? Right there, a nice 180 pip move. Not even, I would have probably done it right here. Because there's some, this is where all resistance will be, right there. Yeah, right here. Right? So basically, what I'm trying to tell you guys here is you don't have to catch a wick entry, because you don't have to catch a wick entry, and you guys don't have to catch a best entry. Because a best entry for you would be a bad entry for someone else. Like let's say you enter here. Cool, you had a good entry. Like, and you're buying, right? You had a good entry for a buy. Let's say you enter here. This would be a good entry for another buy if price is right here. And let's say you enter over here. This would be a good entry for another buy up here. Like, there's so many chances and opportunities to enter the market, and people just get so distracted by the fact that they need to get a wick entry. They need to find the nicest setup ever. Like, just trade what the market gives you. Like, don't be like, for example, the other day people were saying, yeah, gold's gonna reach 1700 next week. It's at like 1570, right? Like, how do you know it's gonna reach 1700 next week? Like, what's gonna happen in the market for that to happen? Like, you know what I mean? But pretty much what I'm trying to show you guys here is you don't have to get a wick entry, and you can easily catch the middle moves, and that's what I go for. I catch a nice low moves inside. I don't care about like the nice big moves. I catch my pips and I leave. Like, in this case, this is 100 pips, but this is a daily time frame. If this setup were to happen on a 30-minute time frame, I would have entered it. I would have bought it right here and TP right there. I think it did happen on gold just now, actually. I called the signal like just now. So I called the signal from, I think I went my 30-minute, right? So I said I waited for pretty much, I entered right here. So I pretty much entered from, I wait for the candle to close above, retest right here. So right here. So I pretty much bought it like that. So before any of this happened here, I pretty much bought it off of this candle closure and retest. I bought it here, and I bought it all the way up to 1572.50, and I touched TP. And I just called the signal too. So I think you guys probably remember this video, this part of the signal, right? Yeah, so like I said, for example, if you look at gold right now, you have an uptrend, right? So, meaning, I don't care for an entry down here. Like, because look, from here, it's been selling for the past, how many days? For the past 15 days, all right? So it's been selling for the past 15 days, and I don't go against trend. Number one rule, don't go against trend. If you go against trend, you're going to see, and it's going to be a big lesson, and it's going to be a very expensive lesson. Because the other day I was talking to my friend, I'm not going to mention his name, but I was talking to my friend, and he was like, yeah, man, I was using your strategy, and I went against the trend, and I didn't go with the trend, and I kind of lost the trade. It's because you went against the trend. This method works only if you go with the trend. Well, every method works like that, right? But like I said, I wouldn't have entered here. Obviously not, because look at this. It's been selling. It's been dropping like flies, right? But what happened here was price came up, opened a new candle above the zone right here, finally retested after one day, retested right here at 1560, and this would have been my entry right there. I would have entered for a long, maybe from 1560, and my TP would have been, I think, 1568, right? So 80 pips. My stop loss would have been obviously right there. So that would have been a nice entry for a buy, not down here. I mean, it's a good entry, but it's not like what. To me, entries like this, I see as gambling. Because look, if you enter right here, like look at that. There's so much shit happening down here. How do you know it's not going to come down in 1537? You know what I mean? So Oh shit. This is gonna buy actually. Let me call a live trade right now. Yeah, this is gonna buy. I marked this up earlier on a 4 hour. Let's say I go long. My TP would have been here. So I'm gonna hold this video up until it hits TP, but pretty much, yeah, this would be a good trade. This would be a good trade right here. This would be a very good trade. Live trade is done. But you hasn't seen this video, this trade play out. What I mean is right here, we have an uptrend. Like I said, we have a nice uptrend up here, right? Nice uptrend. So from here, price started to pull back, whatever, do this thing. And actually, I'm gonna answer this trade. I'm gonna answer this trade. Give me a sec. Actually, no, I'm not, because I already entered a trade earlier, but you guys don't see this trade play out again. But pretty much, what happened is an uptrend. This 4 hour candle closed above the zone. So what happens when it closes above the zone? It's gonna retest. So once you have that retest, I think it's gonna be like around here. You got a retest right there. In this case, you have the retest ready. If from the retest, first buy it up until the next zone. This is the next zone, 1561.90. So yeah, this would have been a trade that I would have took, and I'm showing you guys live right now. As it's playing now, I'm showing you guys a live example. This is a nice 28 pip move, but yeah, this would be a nice trade. This would be a very good trade. Very, very good trade. Perfect trade, actually. But yeah, pretty much this is all I do. I just mark my zones. I trade with the trend, and I never go against the trend. And I always wait for a candle closure before I enter. Always, always, always. And don't even try to go for an entry like on 1 minute before a candle closes, because if you go for an entry 1 minute before a candle closes, you never know what could happen in that 1 minute. I have times where I thought that was going to close above a zone, but then within that 1 minute, like it was a 4 hour candle, but within that 1 minute, it dropped 25 pips. And I'm like, shit. So you always have to wait for a candle closure. You always have to wait for a candle closure. All right. But pretty much that's all for this video, I think. Actually, I'm going to show you guys a lot more examples, actually. But I'm going to wait for this trade to play out. Let's look at some other charts while we're looking at that. But yeah, it's pretty simple. It's nothing too crazy. Like I used to use like some of you guys probably asking me, well, Dan, what happened to your trend lines? Like I used to see your markup of trend lines, and what happened to your Fibonacci? Is like, man, it's just I don't know. It's like I explained it in the video once, but let me explain it again. So let's say we have what would be a good example for that? All right, so let's just look at a blank page. Let's say we have price going like this. So your price going like that. All right, so okay, so you have your top of your demand zone, and then now you have your supply zone right here, right? So if I were to draw the cross, it'll be your supply zone. So basically, we have that downtrend, right? Let's say we have a downtrend. So I wouldn't answer up here because you never know what happens here, right? I mean, you never know that price can continue to go up, because from here, let's say I didn't draw it, but let's say it was an uptrend from here. So it's an uptrend, right? So let's say we had an uptrend, and price started forming like consolidation a little bit, and then start reversing. I wouldn't answer up here for a sell because price could easily continue to go up, right? Could easily continue to go up. But instead, price started to reverse. All right, cool. Now that I know that it's reversing, I went for a sell right here. So pretty much what I would wait for right here is I see a nice candle structure broken, wait for next candle to form, wait for the retest, and enter off of there for a sell. And I would have sold it off until I'll say right there. Would have sold it off until, well, this is just a line chart, so you guys can't really see any resistance support, but I would have sold it off until, like, let's say there's some resistance over there, so it's right there. right? Pretty much, as I was saying, Fibonacci's going with this is basically just like, yeah, if I were to draw a fib, I think it's a 30.2. Perfect, right? So in this case, that same entry that I entered off of the lower high is the same 30.2 retracement, right? So what I mean by that is, you see how you have this supply zone right here and price is just respecting right here, and after once it broke it, it became support. I mean resistance. So what happens to resistance is this resistance right here is also, if you guys look at it, this is also a lower high, all right? And this is also a fib. It's also a fib, a 30.2 retracement fib. So people usually would have entered off a 30.2 retracement. But the thing with fibs now is, the reason why I stopped is because, let's say price doesn't, you see how there's 3 levels on the fibs that are important. There's a 30.2, there's a 50, and there's 61.8. So these 3 levels, how do you know that price is not going to come up to the 50? Or how do you know that price is not going to come up to the 61, right? Because if you look at it, if it does come up to the 61 and then price just forms some like, came up here like this, then it would have been a broken structure because it didn't respect these lows over here. It didn't respect these lower lows, right? It didn't respect these lows, right? Yes, what I mean. So if a candle were to close above here, I mean, would the price would have come here, and it came to the 61.8, people would have sold it here. But why would you sell it when it didn't respect these lows on this side, right? So I would have sold it at the 30.2. I would have sold it at this retest of the lower high right here, and I would have entered for a sell until down there. So that's what I mean by not, I don't use fibs anymore as much anymore, because you never know where it's gonna go. It can go to a 30.2, it can go to the 61, or it can go to the 50, it can go to either 3. You never know. Same with trend lines. So for trend line, I'm not sure if I can draw an example here, but yeah, I can. This is a line trend. Actually, yeah, it actually works too. But with the line, with a trend line, right? So same example. This would be my sell area if I was just looking at my strategy using supply and demand zone, right? So if I were to draw a trend line from here to here, because when you draw a trend line, there's different ways to draw it. Like people draw it from, actually I'm gonna go from a wick. Yeah, I'm gonna go from the chart. So basically when you draw it, people draw it different ways. You can draw it from this wick to this wick, like this, and it can bounce off this wick and fly. Or people can do it from like this wick to like the body, like this, like something like this, like the average, right? Or we can do it like this. And the thing with people is, okay, let's say we only have this. Let's say we're just looking at this, and none of this happened yet. People would have drew a trend line from here to here, just because they see that it's touching these wicks and it's touching this wick as well. But what happens when price starts to breaking this trend line, right? Starts to break it even more, starts to break it. People would adjust their trend line. They will move it here now. After when price breaks that, they'll move it here. And eventually they'll do from this wick to this wick. And that's kind of why I stopped using it, because there's so many different ways to draw it, and it never made sense to me. Like you can draw it so many ways and you just keep adjusting it forever. And I just found that sticking to my zones is pretty much what helped me the most. So that's what I stuck with. But that's all for this video. I'm gonna be doing Market Controller 2.0 next, so stay in tune for that. And I hope you guys like this video. So